Hey, it's Clay at claytrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is one of the parts of my subscription service, the Inner Circle. There is also a live trading chat room, and that gets most of the talk. But there is also this email that I send out every weekend, and it's got several scans on it and charts with annotations, as you're about to see. Before I get started, though, I want to do a couple quick disclosures. Although this first disclosure is going to kind of play out, but regardless, I'll make it anyways. Am I trying to imply that every single alert that is sent out is some massive winner, or is it winner at all? No, absolutely not. Nothing is perfect. No scanners are perfect. Nobody is perfect. Losers happen, and being wrong is just part of the market. But this also goes to show why risk, managing risk, analyzing risk is so important, because losses are going to happen. But when you do things the right way in terms of risk, winners also happen. So therefore, if you have your account in the right position, then everything can and will work itself out. And I'm going to actually show a real-life example of that via some of these alerts. And then the second disclosure point, we are going to go back several weeks into the newsletter and look at the one from 9/17. I realized, yeah, that is several weeks ago. Two reasons for that. First, that's just given the chart plenty of time to play out. It's given everything enough time to, kind of make so we know what happened with it, essentially. And then second, it's just fair to paying members. The last thing I would want to do is to have somebody pay and then, a few days later say, oh, look, that's what I just paid for publicly out there on YouTube. So that's just why we're going back a little bit of time, to give the chart plenty of time and then to also be fair to the paying members. So with that being said, let's get started. First chart to talk about was in the pullback play category, TLRD. And, as I highlighted here, just watch for the pullback. Could be interesting right around that area there. Of course, the price had, gapped up and pulled back a little bit, but was looking for more of a pullback to right around the 2350-ish area. So let's see how this one played out. As a quick clarification point, the email alerts where you get these setups are sent out over the weekend. So what you see here is, what it looked like, before close going into the weekend. And the next day you'll see, or the next candle, I should say, is going to be Monday. So this is what it looked like going into the weekend. And then when you start to see, things play out, that's what's occurred since. So remember, looking for that pullback down around the green line area-ish. I think we can all agree, yeah, it's pulled back a little bit here, but that's not quite within the range of the green line. So will things continue to play out? So the point here is it's taken a while. It's taken a while, but to keep your eye on things. And right there, it pulled back and then just kept on going down. So I would consider this a loser. Now, again, going back to the original point, and this is where there's going to be some educational examples that come in, keeping things controlled. So assuming you came in, you had a stop loss, you had a proper view and a proper strategy towards controlling risk, yeah, this was a losing trade. This was a losing alert, whatever you want to call it. There's no point in hiding anything. Like I said, and I've done this before, nobody is perfect. And anybody that tries to proclaim or maybe only show winners, they're just deceiving you. They are misleading you, because nothing is perfect. And this is one where, yeah, it did pull back. So I was right about that. But, the 2350-ish area just clearly did not act as support. And, down it went, and down it continued to go. So this is why, if you just take a controlled loss, sure, it's a loss. But if you just held and held and held, it could have become a whole lot worse than that. So TLRD was a loser. The next alert was a panic play on ticker symbol GERN. And as I highlighted here, was this a little bit over dramatic panic? If so, there was a nice candle here suggesting that maybe there's some good things to come. So just, yeah, this was a pretty nasty pullback right there. It was up over 675, and all of a sudden, it's way down below 5. Yeah, so was that over dramatic? Nice little candle there. So as I said, are there going to be some good things to come? So let's see how this one played out. So again, here's the chart, what it looked like when I made the alert. So let's go through. So you can see here, hanging right around that area, giving plenty of realistic opportunities for people to get in. And then that move happened right there, which was good for a 26.7% move. Now, this is another learning point about just very basics, but very powerful. Made a big move. Am I saying that everybody should have just bailed out? No, there's nothing there that says you should totally get out or anything. But there's always the choice. to take partial profits, to sell 50% of your position. So if you have, let's just say 100 shares to keep the math easy, you can sell 50. A lot of times, especially with newer traders, they think sell means, well, you have to sell everything. That's not true at all. You can do a partial sell. You don't have to sell 100 shares. If you have 100, you can sell 75. You can sell 50. You can sell 20. You can sell whatever you want. And after a move of that amount, it would be very wise to at least pull in some profits. Now, should you sell everything? Absolutely not. And we'll get to that, with the next example. But is it at least worth it? Sure, because something like this could always happen. So let's keep on going because this one is not over. And then you can see right here, check out the nasty, nasty gap down, which is a threat, which is a risk of when you're holding stocks overnight, when you're doing swing trading and all that. Now, if you're just some sort of day trader, then congrats. You would have had an awesome day trade. But for the swing traders, yeah, this is always a potential risk here with the gap down. But think about it. Yeah, that's pretty rough, but it would be a whole lot less rough had you locked in some profits when it had made the move. Whether I'm not saying you got 26.7 exactly, but let's say you locked it in and got 20% and then had that happen. Would it have still been a losing trade? Yes, absolutely. Would it have been as much of a losing trade? No, it wouldn't have been, because at least you would have locked up some profits, up 15, 20%, who knows, 25%, and that would have definitely cushioned the blow from, that nasty move downwards. And, it does happen. The good news is you can also get gap ups in your favor, but, that's also a possibility with gap downs. And that's why, always consider potentially locking in profits. And yeah, I'm not going to hide one that it was alerted and then there was a gap down. It happens, but it also provides an awesome real life learning example of the power of how managing risk and controlling risk just by locking in some profits every now and then, is powerful. But again, you don't want to sell everything. But yeah, locking in some profits is worthwhile. The final alert here I want to focus on is DEADCAT coming was what kind of the category name that I created for it. And as I said here, looking like a pump and dump, although DEADCATs enjoy these types of plays. So maybe there is some potential here at the 30-ish area. So 30-ish, right around the green line, give or take a little bit, hence, ish. Is there any sort of potential for a DEADCAT bounce? Because, when you consider this thing was at 92 and now all of a sudden it's down at 36, I would say right now that's pretty much a pump and dump. But, like I said, DEADCATs love to live around pump and dumps. So let's see how this one played out. So here is the chart going into the weekend. And think back to TLRD, looking for the pullback, looking for a general area. And, we're going to combine the past couple too, including GERN, which was that nasty gap down. So the week starts to unfold. As you can see there, the chart definitely well within the general area of 30. I think nobody can really disagree with that. Easily well within that area. Some patience is required, but again, plenty of opportunity. And you can see things come to life right there. Pull back, but they're staying, they're going sideways. It's not like anything's crashing. And then that right there. Now go back to GERN. That sort of move right there, that's a good percentage move. So would it make sense to at least lock in some profits? Absolutely. But sell everything? No, you don't want to ever sell everything unless you're officially getting stopped out or something like that. And here's why locking in some profits is fine, but let's just keep going. And imagine if you had just totally removed yourself from the trade. Said, all right, I'm just going to take everything out. Well, there's a nice move right there. Oh, and hey, check that out. Look at that gap up. Remember, gap downs, yeah, they happen. But here's a gap up in everybody's favor. And then check out that move right there. And that entire profit window turned out to be 294%. Now, am I saying that but people played it perfectly for 294? I'm not saying that at all. Let's just say they played it kind of right. And they got, let's just say 150% out of it. Yes, think about it. There was 2 previous losing trades. But now all of a sudden you hit one for 150%, 175, heck, even 100%, we'll say. All of a sudden, all that is wiped away and then some. But this is also why, again, imagine if you had just said, well, I'm going to sell completely out right here. Now, yeah, it's wise to take some partials to, sell a portion because you could always have a nasty gap down. But to remove yourself from the trade, you would have missed out on that continuation of the move, and you would have been feeling pretty bad about yourself. So just remember, sell does not mean you have to sell everything. And this is a reason why you wouldn't want to ever sell everything, because you never know if something is in your favor. Now, had you sold some here and then the price just crashed down, well, then yeah, that's a different story. You might as well stop out and eventually remove yourself from the trade. But that's not what happened, right? You got continuation, and it ultimately turned out to be a huge, massive move, which would have taken care of the previous two losers. Because remember, TLRD would have been a totally controlled small loss. GERN, yeah, that was a nasty mover, but had you locked in some profits up, 15, 20%, it would have really cushioned that loss. And then all of a sudden you have this where, even if you got 100% out of it, which means you would have probably had to play it quite terribly to only get 100% when something moves almost 300%, then you can see how overall a single winner can wipe away a lot of disciplined, controlled losses. Now, there is a lot more to it in terms of, well, how do I know when I should lock in partial profits and stuff like that? That's what I teach in my courses. But the overarching theme here is that you can have more losses than wins, but all it takes is one win and you can be sitting pretty. If you are interested in joining and getting these newsletters, and remember, this also includes the live trading chat room right here, just go to claytrader.com/inner circle, or if you just go to claytrader.com, you'll see up at the top an area for inner circle, and you can go there. The cost for this is $99 per year, not per quarter, not per month, not per week, per year. If you do the math on that, pull out the calculator, you'll see it breaks down to $8.25 per month. Or if you break down the math even further and do it per week, you'll see that it's literally $1.90 per week. So if this is not fair pricing, I don't know what would be. But as I always tell people, you know what? I'm very, very, very confident that over the time span of 12 months, you'll get at least $99 worth of value. And there's also an app that comes with it, so you don't have to stay chained to your computer or anything like that. You can stay in touch with what's going on wherever you are. So overall, like I said, fair pricing. If you have any questions, let me know down below, and I would be happy to answer those for you. But I hope you decide to give us a try. I mean, $99 for an entire year, I'd say that's a good risk versus reward.